January real estate stats are out, and once again, these numbers are shocking. So how was the real estate market in January in Toronto and the surrounding areas, and what does the real estate market in the future holds for us? That is coming up right now, so stay tuned. Hello, this is Sonia, your local realtor with Remax Realty Specialist. Welcome to my channel where we love talking about real estate and all things in and about Greater Toronto area, and we would love to take you along the ride. So hit that subscribe button and the little bell icon so you get notification every time there is a new video uploaded. Borrowing costs are set to rise as early as March as the Bank of Canada plans to increase its trend-setting interest rate in response to soaring inflation and a cheap debt-fueled run-up in home prices. But just how impactful will higher mortgage rates actually be when it comes to cooling the nation's scorching real estate market, especially in Toronto and the surrounding areas? Demand for ownership housing remained very strong from a historic perspective in January 2022. At the same time, listings remain in short supply, resulting in tight market conditions and a very strong year-over-year price growth. There were 5,636 sales reported through the TREB MLS system in January 2022, which is down by 18.2% compared to 6,888 sales in January of 2021. While sales were down substantially compared to last year's record results, the January 2022 results was the second best in history for the month. Active listings at the end of January amounted to 4,140, down by 44% to the lowest level in more than 2 decades. New listings were down by a similar annual rate, down by 15.5% as sales. Because sales and new listings moved in a relative lockstep, the continuation of tight market conditions resulted in a 33.3% annual increase in the MLS Home Price Index Composite benchmark. Similarly, the average selling price was up by 28.6% year over year to $1,242,793. Looking forward, TREB's outlook for 2022 is as follows. Total homes reported through TREB's MLS system in the GTA will reach to 110,000, representing a dip from 2021, but still a strong result in comparison to previous years. And the average selling price for all home types combined is set to climb to 1,225,000, an approximate increase of 12% when compared to last year. However, according to new commentary from Canada's banking regulatory head, home prices could drop as much as 20% once rate hikes are underway, based on the precedent set between 2015 to 2017. That was the bank's last significant hiking cycle, as additional market cooling policies such as foreign buyers taxes were implemented during that time frame to stem speculative activity. As per the Superintendent of Financial Institution, OSFI, in some markets where you had a really rapid increase in prices, you could see a fall of 10 to 20%. That will be a return back to sanity after a sudden buildup in prices. And by the way, we went through that in Vancouver in 2015 and 2016, and then again in Toronto in 2016 and 2017. And you are talking through to peak declines of 10 to 20% as we can absorb that volatility. Prices in 2021 tend to be pretty sticky. However, other industry experts don't think that the immediate price reaction will be so steep. The fact is, house prices usually don't plummet overnight like they do in the equities market. The housing market is pretty sluggish and pretty slow to change, especially on the way down. On the way up, it can explode. But when the market's cooling, prices tend to be pretty sticky. Jason Mercer, who is a senior analyst at the Toronto Regional Real Estate Board, says that while historically rate hikes do slow the market, in the short term, buyers have been resilient enough to absorb the higher cost of debt and tend to move forward with their purchasing intentions. we are probably more likely to see some softening. If things cool down in the second half of this year, a slight decline as well. But I don't know if it's going to be the magnitude of 20%. Even if the price drop by 20%, that is just a drop in the bucket. Another more sobering point is how much of a price break would a 20% drop be really? The latest data from TRAP shows that average home prices in the GTA increased by 28.6% since last January alone, now sitting at $1,242,793. A 20% cut would lower that to $994,235, taking buyers back about 12 months in time in terms of affordability and leaving the priciest end of the market. Detached houses will still be out of reach for many. If prices fall a lot of time in periods like this, it is just because buyers are fed up. That's kind of what happened in 2017 in the suburbs. People said, this is insane, and prices fell by 20%, and then they settled for like 2 years. I think we cannot predict the future, but it is possible that we might see similar trends what we saw in 2017. Nobody has the crystal ball. Let's see what the real estate future holds for us. Thanks for watching, and don't forget to join me next week. Until then, stay safe and stay happy.